What if I told you that you could start investing in the stock market with as little as a few dollars, without needing to pick individual stocks? Sounds like magic. Well, it's not. It's called ETF investing. In this video, you'll discover how ETFs can help you grow your money, even if you're a total beginner. Let's dive in. Cut to host. Host, welcome to the ETF Investing Masterclass. If you're new to investing or have heard of ETFs, but are not sure how they work, you're in the right place. Today, I'll explain what ETFs are, how they work, and why they can be the perfect investment strategy for beginners. By the end of this video, you'll be ready to start investing with confidence. So, what exactly is an ETF? ETF stands for Exchange Traded Fund. It's a type of investment that lets you buy a bunch of different stocks, bonds, or other assets in one go. Think of it like a basket. Instead of buying individual stocks, you buy one ETF, and that gives you exposure to a whole group of companies or assets. Imagine buying a small portion of Apple, Tesla, Amazon, and a few other companies without having to research each one separately. That's what an ETF does for you. Visuals show a simple graphic of a basket with company logos inside it. Let's break it down further. ETFs trade like stocks on the stock exchange, meaning you can buy and sell them throughout the day, just like any other stock. But instead of owning one company, you own a piece of an entire index or sector. For example, if you invest in an ETF that tracks the S&P 500, you're indirectly investing in the top 500 companies in the US. Visuals display a chart of the S&P 500 ETF versus individual stocks. Host, ETFs are managed by professionals who choose which stocks or bonds to include in the fund. So, you don't need to do the picking yourself. This makes it a great option if you're a beginner and don't want to worry about individual stock research. Now, you might be wondering, why should a beginner like you invest in ETFs? Well, let me tell you the benefits. Diversification. When you buy an ETF, you're not just buying one stock, you're buying a range of stocks or assets. This spreads out your risk, so you're not as exposed to the ups and downs of a single company. If one company performs badly, the others can help balance it out. Lower costs. ETFs usually have lower fees than mutual funds because they are passively managed. This means you keep more of your investment returns. Liquidity. ETFs are easy to buy and sell, and they trade throughout the day like regular stocks. This gives you flexibility and control. Accessibility. You don't need a lot of money to get started. Many ETFs allow you to invest with as little as $50 or $100. Transparency. Most ETFs are transparent, meaning you can easily find out exactly what stocks or bonds you're invested in, so you always know where your money is going. Visuals show icons or quick animations representing each benefit as the host explains them. Now, let's look at some of the most popular types of ETFs you can invest in as a beginner. Stock ETFs. These are ETFs that invest in stocks. For example, the Vanguard S&P 500 ETF. You invest in the 500 largest US companies. Bond ETFs. If you want to invest in bonds, bond ETFs are a great option. They are less risky than stock ETFs and are a good choice for more conservative investors. Sector ETFs. These focus on specific industries like technology, healthcare, or energy. If you believe in the future of a certain sector, you can invest in it through an ETF. International ETFs. Want to invest outside of your home country? International ETFs give you exposure to markets around the world. Visuals, quick graphics or stock footage showing the different types of ETFs. Host. So, how do you actually buy an ETF? It's as easy as buying a stock. Host. Step 1. Choose a brokerage platform. Platforms like Robinhood, TD Ameritrade, or Vanguard allow you to buy ETFs with no commission fees. Host. Step 2. Open an account and deposit funds. Most platforms allow you to start with as little as $50 or $100. Host. Step 3. Search for the ETF you want to invest in. Type in the ticker symbol of EOO for the Vanguard S&P 500 ETF. Select the amount you want to buy and hit buy. That's it. You're now an ETF investor. Host. But, of course, no investment is risk-free. With ETFs, the main risk comes from the market as a whole. If the stock market drops, your ETF will likely drop too. That's why it's important to think long-term with ETF investing and not panic during short-term market drops. Visuals show market downturn and recovery charts. Host. But remember, because ETFs are diversified, they tend to be less risky than individual stocks, especially for beginners. Host. And there you have it, everything you need to know to get started with ETF investing. It's a great way to build wealth with lower risk and less stress. Now it's your turn. If you feel ready, go ahead and start researching some ETFs and begin your investing journey. Host smiling. If you found this video helpful, make sure to hit the like button, subscribe for more investing tips, and share this video with anyone you think might benefit from it. And remember, investing is a long-term game, so take it one step at a time. I'll see you in the next video.